In this video, guys, we're going to look at 6 ways to trade aggressively. Stay tuned. Hey traders, warm welcome to you. Thank you for joining me. All right, so aggressive trading, defensive trading. Aggressive trading, these are some of the things that I would do if I'm trading aggressively. Now, it's important to point out, there's no default explanation for this. One person's aggressive, might be another person's defensive, but really the idea with being an aggressive trader is, listen, we're not going into the gun-ho territory of just swinging around sides and hoping for things to happen, and that's a fine line. You know, we're still structured in our trading plan, but we're pressing a little bit harder than we perhaps would with a normal environment or with a defensive type of strategy. So there are certain things that we're doing under certain conditions, which means we're probably taking on more risk, we're probably accepting a larger loss, but the point of aggressive trading is we're pushing the throttle down hard when the market is conducive to our style and our strategy, and that's going to be different for everybody. For me personally, I prefer a high volatility environment, up moves, down moves. For others who are trading maybe a kind of chugging trend strategy, they don't want that. They want a nice steady kind of plod. So it's all very, very personal to the way that you trade. So some of the things we might do, guys, is number one, we're definitely adding to winners. You know, so rather than adding and scaling into trades kind of as the market goes against us, adding to winners, we're literally, as the market goes in our favor and maybe starts to pause, we add another clip on, and then another clip and another clip. So the theory behind this, of course, is that when we're in the best trades, we're in our biggest size. But of course, the downside is that we end up moving our average up, and one little kind of retracement back stops us out or basically puts us into a loss-making situation. So it's very aggressive, this is, but it can pay off with the right environment. You know, if you're in an environment where, you know, say the market's free falling, you've happened to go short there with one batch, starts to pull up here, starts to roll again, you add again, you know, all of a sudden now your kind of average is here, and you keep doing this. You know, if you're right and you're pressing the trade, you end up being, you know, kind of 10 times the size. Yes, your entry's lower, but if you get that final flush, all of a sudden you're in with a big boatload of contracts or whatever you're trading, and it becomes very profitable for you. But of course, the issue is that when you go aggressive, you leave yourself vulnerable, because one little pullback, it puts you into a loss-making situation on the average of your trade. So being cautious of that, but adding to winners is definitely kind of an aggressive move. Number 2, guys, is holding for the larger move. So whilst if we're trading defensive, we might be kind of taking stuff off and just, you know, scaling out and just maybe leaving a trailer. Being aggressive is like, this is my position and this is my exit, and I'm in the situation, the environment which is conducive to us moving from one point to the next, or from one point to the close of the day, or from one point to the end of the week, whatever your kind of target is, and you're sticking with it. Now listen, I'm not going to move from the position. The position is this. It's either going to stop me out or it's going to hold me, and I'm doing that because I'm comfortable with the situation we're in. I'm not concerned about the market doing what it shouldn't do. That's what my stop is for. But maybe if it's a little bit quiet, a little bit choppier, you're more interested in scaling stuff off and putting some in the bank. Whereas aggressive, it's like, listen, I don't want to scale anything off. I want to be sure I'm in a full size position for when it gets to my final target. Number 3, guys, is take every setup. So you're far looser with the criteria, and you're almost allowing the market to kind of smooth out any of those bumps. So let me explain what I mean by that. So if you're in a market that's really good for your type of trading, lots of kind of opportunities, you can be freer with your setups because perhaps the underlying market conditions are generally a little bit more forgiving. So let me give you an example. Let's say you've got a brutal downtrend. Let's keep with that theme. You've got a brutal downtrend intraday. You know, if you're taking selling pullbacks, let's say you just take a pullback that's not really a perfect setup for you. Maybe it doesn't quite tick the boxes. Maybe it doesn't quite get through the filters. You might still take it, but the fact that the market is really in a heavy downtrend, it's very aggressive setting, more forgiving for you, and doesn't quite get the setup you want, but it's more forgiving because ultimately the pressure is still on the downside for it. So you tend to be more aggressive. You're taking every setup, everything that kind of half sets up for you, knowing or hoping, there's no hope in trading, is there? But you get the point that the actual pressure of the market or the way the market's trading is going to be a bit more forgiving than perhaps a market that's a little bit more Jekyll and Hyde. Fourth thing, guys, is be in the market more frequently. So an aggressive trader, or ways to trade aggressively, is to make sure you're in the market constantly. Again, we're making sure that the environment is conducive to this. Same with all these things. But what we're doing is we're making sure that, hey, I want to be in the market. The conditions are good. I'm trading frequently. I'm trading size. I'm trading a lot. So really, wanting to be in the market as much as possible, because the supply-demand imbalance is there and it's so heavy that it makes sense to be in the market as much as possible, compared to other times when you maybe have balance, you maybe have kind of chop, you maybe have indecisiveness, and that's when you don't want to be in the market all the time. So it's just being in the market more frequently, having more risk. Again, it's all about the risk. And number 5 is adding size into fresh lows or highs. So similar to that, adding to winners, but this is super aggressive. If you're in again, we'll stick with this kind of scenario. As the market's pushing to lows, rather than waiting for pullbacks, you're selling more into lows. You're pushing more into it, because you're assuming that we're in such an environment where there's such a lot of selling that you just want to add to that selling. You want to short and trigger those stops and help to kind of push things lower. Now, of course, it's going to depend on what platform you're trading, spread bet, CFD, futures, etc. You might not have actually direct trading in the exchange, but regardless, the aggression of selling into fresh lows when this thing's maybe down 200 pips already is super aggressive. But again, going back to the initial point, the market has to be in the right environment for this. You start selling into lows under normal conditions, you're going to get stopped out, because the market's going to mean revert more often than not. And increased risk. So obviously this is a catch-all, guys, but it could be increasing your position size. Again, within the parameters of your trading plan. We're not going off piste here and going crazy, but it's like, listen, under certain conditions, I'm allowed to trade X contracts. All right, so now I need to trade X contracts. I'm going to trade aggressively. I'm going to scale up to this size position. This is the capital I'm going to risk on the day, or on the month, or on the quarter, whatever time frame you're trading. And I'm going to now put that capital to work, because I feel there's an opportunity. It's time to get aggressive and push this. And so really, trading, guys, is very much, it's off and it's on, it's hot and it's cold. And this is one of the times that if everything's lining up for you and it looks right and it's fitting your strategy, you're in tune, you're trading well, then being a bit more aggressive will pay dividends in the long term. Of course, you've got to keep the risk managed, making sure you're not going to undo all the hard work that you've done. But at the same time, taking advantage of the opportunity does mean that you'll get much more of a boost if you get it right than if you're kind of just still trading and being a little bit cautious and stuff and not really leveraging on some of the things the market's giving you. All right, guys, take care. I'll see you in the next one. Keep your risk managed. Bye-bye.